Hey folks, Chris McLean back again, Peak Performance and Transformation Coach, and we're here with another episode of the Peak Performance and Predictable Growth Show, the Peak Performance Show for agency founders, owners, and leaders, where we explore the agency journey from the unique perspective of those at the coalface of the industry. My guests help us unlock and dissect strategies, tools, and tactics that are working from many and varied aspects of agency life to help you deliver better results for your clients and to build and scale your agency to 6-7 figures and beyond. And my guest today is quite distinct and going to help us look at a different aspect of our business than we usually do here on the show. Nick Proffer from ClearMe Credit actually helps entrepreneurs, business owners scale their business using credit. So we're going to dive into finance. We're going to dive into credit. Nick, super interesting. As we were sort of saying earlier, credit is often has a bit of misnomer attached to it. People don't like to get into debt. They don't like to use credit, but you can actually use it to grow a business. I think that's fascinating. So take us through who you are, how you kind of got into this line of work, and then we'll get into how do we use this to help our business grow.
Yeah, definitely. I appreciate you, Chris. Thanks for the intro.
Pleasure.
Honored to be on the show. And yeah, my name is Nick Proffer. I'm the owner of ClearMe Credit LLC, which is the sister company of Explore Media, which is our parent company. We are a little different. So yeah, we help scale businesses through strategic financing and proven digital marketing methods. And so our main focus is helping you grow your business first through online avenues, as well as strategic debt financing is what I like to call it. And so a lot of people don't understand credit. They don't really understand finances. It's a pretty touchy subject when it comes to most people and even businesses. And so that's kind of how we have separated ourselves from the competition, and how I've kind of like integrated, two kind of different verticals into one, just because of my previous background and knowledge. And so I've gone, personally, I was really interested in like credit and travel hacking when I first started out as 18. I got the travel bug, back when I was like 7 years old. My great grandparents took me to Hawaii for the first time, and pretty much ever since then, I've been trying to figure out, how to live top lifestyle, how to travel for free, how to build a business around travel. And so I have set it up now to where I've got a team that handles a lot of the work for me, while I just focus on scaling my business. And pretty much all I need is a laptop and an internet connection, so I can pick it up and go anywhere I want. And so I've been able to leverage my knowledge in credit and marketing to be able to do that. And what we help other businesses do is build up business credit. And so business credit is a little different than what most people think. Business credit is a lot different than personal credit. However, building it up, the practices are pretty similar. And so with personal credit, you usually get your personal credit score 300 to 850. Actually goes up to 900 depending on the algorithm now, what you're looking at. Now with the business credit score, it's actually 1 to 100. And so still, the higher the credit score, the better. In order to do that for the business side, is you set up your entity just like usual. And most people, are filing LLCs, single member, multi-member, or whatever. I'm not a tax professional, so always consult a tax attorney first. But,
good caveat to throw in there. So put a disclaimer in.
Let's just save both of our butts there for a little bit. And but yeah, set up your entity, figure out which one's best for you, and then starting to set up your vendor accounts. And so once you set up vendor accounts, it's kind of similar like setting up revolving credit on the personal side, but it's for business. And so you set up these net 30 accounts. It allows you to order supplies on consignment, and then they'll usually ship you the supplies with the invoice. If you work in retail, you've probably seen this multiple times where you get a shipment in, you fill out the invoice, and then the business has 14 to 30 days to pay it back. And so once you have a certain number of those set up with the certain right companies, then you actually start getting a business score reported onto the business bureaus. And the cool thing is that the business credit bureaus don't report to the personal credit bureaus. At least most of them do. Some do, but most of them don't. And so when you're carrying high utilization on your credit cards, anything over 30%, that's going to be hurting your personal credit score. But on the business side, you can, max it out. And even though utilization does have a small impact on the business credit score side of things, it's not going to be affecting your personal credit score whatsoever. And so the cool thing about that, I wouldn't say cool thing, but if and everything were to go wrong, you had to file bankruptcy. Trump just got out of office, and he's pretty notorious for this. He's filed corporate bankruptcy 4 times over the course of his business lifespan, and he's still, considered probably one of the best businessmen in the world. And so, if that were to happen, if you got your business set up right, and you had maxed out all your business lines of credit, and you had to file corporate bankruptcy, that won't affect your personal credit score whatsoever. And so it's essentially low to no risk doing this strategic debt financing this way. I don't necessarily recommend it for startups. I recommend always measuring, your KPIs, your key performance indicators in the business, see what's moving the needle the most, and then, spending more of your budget, towards those avenues. For most businesses, it's marketing or sales. And
interesting.
So with business credit, their banks are, a little more generous especially when it comes to the credit limits. And so with a personal credit card, you could maybe get approved for 5, 10K, maybe 20K, depending on the card. But with a business credit card or just a business line of credit in general, it's really easy to get approved for 50 to, over 6 figures, 100K in financing. And so a lot of the time you can get a 0% interest at 12, 18, sometimes up to 21 months is as far as I've seen it go. And so you can, essentially it's, interest free, as long as you got a good solid plan in place to pay that back, and that you're going to spend X amount in payroll, X amount in marketing, and this is going to convert in X amount of sales. Then you want to have a good plan, be able to pay that back within that 12 to 18 months, and as long as you do, you're using the bank's money to be able to scale your business without having any expenses out of pocket.
So is that where most people sort of come to you to get that help? But what do I use this for? They say, I want to grow my business. Maybe am I financing stock? Am I financing sort of marketing campaigns? Is there anything that works better than others in terms of what you should be financing, or what's sort of safer to finance?
Like I said, you don't want to. I wouldn't necessarily recommend it for startups. However, I've actually seen it where some people have been able to leave their job just by being able to leverage debt to finance some vehicles, and then turn essentially depreciating liabilities into income producing assets. And so they can be able to leverage that credit, buy or finance a few cars, and then list them on the ride sharing apps like Turo, Get Around. They have partnerships with Uber where people can rent out your car now to drive for Uber and Lyft if they don't have a car themselves and they want to work for Uber and Lyft. And so I've seen people being able to quit their jobs that way, but for in terms of like more business and corporate side of things, I wouldn't recommend it for startups unless you already have, like I said, performing KPIs, like key performance indicators that are measurable in being able to measure that success or sales for your business. And so if you're you're getting X amount of sales for a certain amount of Facebook ad spend, like if you're putting $100 in Facebook ads and you're getting roughly about $200-300 in sales, you can scale that 10 to 100 times, and so you could put $1,000-10,000 a month in Facebook ads and probably expect to get 20, 30, 50 grand in sales back. And so that's where I would expect to focus on either marketing or sales. If you're bottlenecking your business because you're doing it all on your own, and you know that you need to hire someone else, and you can't really focus on sales at that point, or maybe you love sales and you can't really focus on marketing or like customer support, then use that business line of credit to hire either a customer service specialist or a salesperson if you don't like sales. I personally don't like sales. I had to do it for the first couple of years, and so I learned how to get good at it. But at first it's scary, especially for someone starting out or someone having a high anxiety. Like it can be scary. But if you don't like sales,
out there,
you can hire it out. Yeah.
So talk me through, obviously, when you start talking about credit, the first thing that comes up is debt and that negative aspect of, well, I'm just getting credit, I'm getting myself into debt. Not all debt is created equal. Not all credit is created equal. Maybe you could take us through that, sort of that aspect of what actually is good debt versus bad debt.
Yeah, and so we were just speaking a little bit on how to leverage, debt for profitable reasons for your business. And so that would be an example of leveraging good debt. And like you said, most people, tie credit immediately with debt as a negative aspect. And, especially me growing up, my parents always told me, credit cards are evil. Never open a credit card, never get a credit card. And it's just because they were uneducated. They didn't know how to use credit. And so most people do. Well, they'll open up a credit card, get approved for $2,000 to $5,000, and then they'll go on a spending splurge, and then they're not going to be able to pay that back before that interest promo period expires. And then now all of a sudden they're like, oh, where's this $100 a month coming in? And now they're paying $100 a month just in interest because they're carrying, a balance of $2,000 on a credit card at 25% interest. And so that's where people spiral down and like dig themselves in a hole where it's almost like impossible to get out of. And that's where we also help our clients, even on the personal financial literacy side, is make sure you have $1,000 emergency account. Make sure you have 6 months of living expenses saved up, because that's another thing. People will open up a credit card and they're pretty good at using it and pay it off every month, and then their kid breaks an arm and then they've got a $2,000 medical bill, and they're like, well, we'll just put it on credit because that's easy. And the same thing, they'll just not be able to pay it back. 2-3 months down the road, another unexpected expense comes up that they have to put on credit. And I never recommend putting unexpected expenses, emergency expenses on credit. Like obviously there's probably certain circumstances where that would make sense that I probably can't think of at the moment, but you always want to budget for those types. Everyone knows that they have an unexpected expense probably 2 or 3 times a year. And so, budget a couple $100 a month, put that in a savings account for when that time comes.
Yeah, it's really good advice. Really good to have that redundancy baked into your life, where you've got that emergency fund set aside and you're not using credit. I know Robert Kiyosaki talks about this a lot, and it's really that understanding. You talk about financial literacy, and that's obviously what he's all about, and Warren Buffett's another guy that talks about this, that really understanding the difference between asset and liability and what that actually means. Like I know Kiyosaki talks a lot about, most people think that buying a house is an asset. They see a house as an asset because it'll accrue over time and I can sell it. But Kiyosaki particularly describes an asset as something that actually produces revenue on a monthly basis. So a rental property where I buy the property, but then I'm getting the rental money every month. Is that kind of the distinction that you make? And obviously that's, for me, that's sort of what I took from what you were saying. Don't go off and buy a big screen TV, invest in your business that's going to generate that. That's an asset, right? If you're using credit and leveraging that money to build an asset, rather than just go and buy a bigger TV, which is a liability. Is that kind of the essential 101 of financial literacy?
Yep, you hit the nail on the head for sure. And that's exactly how I started out. That was actually the first book that The Rich Dad Poor Dad, Robert Kiyosaki.
It's a good place to start.
As the first book that started it for me too. That's it really opens your mind between exactly what you just said. You know, a lot of people think, you know, buying a house is going to be an asset because now you're a homeowner, and then, you know, 20, 30 years down the road, you can sell it with real estate, you know, supposedly appreciating over time and building up that equity. But according to Robert Kiyosaki, and something I personally believe as well, is that an asset is something that, you know, like you said, produces income. And if you're a house owner, you're putting money into that house every single month. That house isn't putting any type of money into your pocket. And so obviously with the gig economy, there's tons of ways that now you can leverage that to turn your liabilities into assets. Like I said before, some people are quitting their jobs just from financing vehicles and then putting them on a ride sharing app. And most of the time when you purchase a vehicle, that's a depreciating, you know, liability, because it could get wrecked. It could, as soon as you drive it off the lot, if it's a brand new car, you know, it's going to lose at least 20, 30% of its value. And so, but now people are, if they're doing it right, which I've got a buddy of mine that he has 18 cars that he manages on an app, and he makes over 6 figures a year on Turo, just on the Turo app.
Wow, just literally loaning out the cars to other drivers, not even doing the driving himself.
Yep, exactly. He just picks them up. Sometimes some cleaning that needs done, refilling with gas, and he'll just pick them up, clean them up, and then drop them off wherever it needs to go next.
Wow. And it's a whole new world out there. That's whole new world out there. So the gig economy, ride sharing, the sharing economy. There's a whole different world of opportunity out there if you can really find smart ways to do something like that. Even thinking like the Airbnb type model, right? You've got a rental property. If you can buy that depreciating asset and then rent it out, or on Airbnb, you can make pretty good money on Airbnb.
Yeah. Or even if you're like in restricted markets like Miami, or like where I'm at here in Denver, like you can't have an Airbnb unless you're a homeowner, unless it's your occupied residence. And so then you're kind of restricted. You can't have, you know, multiple Airbnbs. You can have more investment properties, but they have to be long-term rentals. And so essentially you still could turn your, you know, mortgage into income producing asset just by renting out an extra room or two, or building up a shed in the backyard and renting that out.
Yeah, interesting. Yeah, it's always fascinating kind of seeing how the world moves, and then how businesses and entrepreneurs manage to kind of pick up the arbitrage in the new system. I'm going to say I never thought of that, but probably I don't know if we have that here in Australia where you can loan cars out to drivers, but yeah, it makes a lot of sense. I know one of my best mates, his dad used to buy taxis. He was a taxi driver, and he owned taxis, or the licenses on taxis, and then Uber came in and kind of smashed that business.
Yeah,
unfortunately. But essentially, this is kind of the 2021 version of that type of business model, where you own the asset and you're leasing it out through Uber and Lyft and all those sorts of services. Yeah, smart stuff. And so I think this said having basic financial literacy for any person, but particularly for a business owner, is really, really important stuff. So apart from assets and liabilities, good credit, bad credit, is there any kind of 101 financial stuff that a business owner should consider?
Yeah, and I think I was speaking a little bit about it earlier, but building up your business credit, getting those vendor accounts, those net 30 accounts, net 14, net 30 accounts, and essentially those are lines of credit, but not necessarily a preset limit. But once you set up at least 5 of those accounts and then get those reporting on the business bureaus, you'll get something called a paydex score. And then once you hit over 90 paydex score, because the scale's from 1 to 100, so once you hit 90 or above, which is pretty much like an A+ score, then you can start applying for like store credit, tier 1 credit. And if it's a brand new business, this is the steps that you follow in order to not have it tied to your social security number. So here in the US, people have a social security number that the government tracks. Once you apply for an LLC and then register it with the IRS, you'll get something called an employer identification number, which is essentially a social security number for your business. And so if it's a brand new business just starting out and you don't have a business credit score, a paydex score, they're going to ask for a personal guarantee. And so whenever you apply for credit, they'll ask for your social security number. So if, like I said before, if you were to ever default or have to file for bankruptcy, whatever the case is, that will actually show up on your personal credit report. And so if you do it the right way, setting up your vendor accounts, excuse me, setting up your vendor accounts, see what else, you want
to avoid the IRS come knocking on the door.
Exactly, yeah. Make sure you have a 1-800 number, website that's ranked on Google. That's important. Okay. And then that's pretty much it, I think. And once all that is set up, once you start applying for business credit, your lenders are going to check that, and they're going to make sure if your business is listed in the white pages on Google, if it has a website, a working website, if it has a business phone number. And like I said, the 1-800 number is a little important. If it's like a residential number, they're going to be able to kind of figure that out. Right. Same thing with like home-based businesses as well. And so you have a home-based business, in order for your chances to increase for these credit applications for business funding, that you can set up a virtual business address through like something like services like Regis.com. There's tons of other ones that are popping up all over the place now, but you can set up a virtual address with them. They'll even scan and email your mail to you if you want to have your mail sent over to them. And then you can use their, they'll actually give you like a physical address that you could set up as your business address. And so once you have all that criteria set up, once you start applying for these business lines of credit, they won't ask for a personal guarantee, or even if they do, you can kind of negotiate your way out of it if you have all these systems set up in place. And so once that's done, it's just kind of like the government verifying your identity, but for the business. And so once you apply for this business credit, they'll go through all these criteria, check mark them off, and if you're all good, you'll get $50,000 line of credit, 0% interest for 12 months, and then you can go and use that to help scale your business.
Awesome, man. It's a lot to think about. So I think it's important to have people like you out in the world to help guide people and give them most people wouldn't even know that that checklist existed, or even if they did, how to make sure that they're getting everything lined up and all the possibilities and the minutiae of how they can actually leverage this stuff. So really, really cool stuff. Really, really important for business owners that are looking to scale. And it sounds like 0% on a 12-month loan, if you can pay it back, sounds like an amazing way to get your business going. If people do want to find out more about you, they're looking at growing and scaling, and this sounds like a good thing for them to do. What's the best way for them to come and reach you?
I would say if you're needing, just business credit in general, you can just go to our website, ClearMeCredit.com, book a free consultation with us. I am mostly active on Facebook. So yeah, if you want to reach me on Facebook, if you're active on Facebook too, just go to that link there. And that is my personal page. So I'll be very responsive on that if you send me a message or something like that.
Cool. Yeah, really, really, really fascinating stuff. I'm hardly a financial wizard, but I think it's super important as a business owner to have financial literacy, because we're making money, right? And we want to keep as much of it as possible. And we want to make sure that we're working within the guidelines, but maximizing what we can keep, how we can spend it. And this has been really, really fascinating, really interesting to understand how different ways that you can leverage credit, and understanding, not all debt is bad debt, as long as you're buying the right things with it. You're sort of ticking the right boxes and coming from it from the right perspective. So, I think it's been. Sorry?
Strategic financing. Don't go spend it on dumb stuff. Make sure you're hiring it out, or at least reinvesting into yourself to grow your business.
Love it, man. Love it. Thank you for dropping by. Thanks everyone for tuning in as usual, but I hope there was a lot in that. Slightly different topic than what we usually cover on the show, but super, super useful. Really critical to have basic financial literacy, and really interesting way to grow and scale a business. Nick, thanks for dropping by, mate. It was really enlightening. Appreciate you dropping by and taking the time.
Of course. Thanks for having me on here, Chris. I appreciate it.
Pleasure. Reach out to Nick, folks. Get your credit sorted, grow your businesses, get your financial literacy in check. Thanks for tuning in, and we'll catch you on the next episode. Thanks.